Okay, welcome back. In this section, we're going to discuss theta, your daily paycheck. So what is theta? It's a letter in the Greek alphabet, but as it relates to options, it really has to do with the time decay of your options. Theta is what gives us that income from our option strategy trades. So there are three factors that affect theta. One, the amount of time until that option expires. 2, volatility. 3, the movement of the stock. The stock price doesn't stay stagnant, it's going to move around during the time that you're in the trade. So you have to take that into consideration. Let's go to the platform and take an example to learn a little bit more about theta. On the chart, what I have shown here is an example of an iron condor trade. That's not important necessarily for what we're talking about here. Iron condors are just one of the strategies that we utilize in our portfolios, and you can learn more about how to trade iron condors in one of our other courses. The key thing is down here is you can see that I have theta as one of the options when analyzing our trade. So right here we're looking at the S&P 500 index, ticker symbol SPX. It's currently trading at 2179.28, 29. So right here. And so if we look at theta, essentially what that shows is a theta of 143.69. Well, what does that mean? That means that every day that we're in this trade, and price and volatility, if they were to stay exactly the same, we would be making $143.67 per day. Okay? $143.68 every day if price were to stay exactly where it is and volatility were to stay stagnant. Now, that's nice to see, and it's nice to get a snapshot of where theta is at any given time, but you also have to recognize that theta number is going to change. As you can see, the market's open and it's continuing to change up and down a few cents just as we're watching it right now. So let's take a look and see what happens if we adjust the date. Today is August 5th, 2016, and watch this pink line, which represents our profit in the trade at any given time. The teal line, by the way, is the expiration date of this particular option strategy. So take a look at what happens to our profit line as time goes by, and watch the theta number as well. So if we go to tomorrow, it goes up a little bit. Next day, up even more. And as you continue to move through time, as you continue to move closer and closer to expiration, theta is going to increase. And so if we look at August 18th, now our theta is over $209 per day. And so this has given us that income each and every day that we're in the trade, that price stays in the range that we want it to. And so as we get closer and closer to expiration, it continues to go up and up and up until eventually that pink profit line is going to meet with the expiration line, which defines the exact max profit or max loss in the specific strategy. So these options expire on the 16th. So as you can see, once we get that, it's exactly like the expiration date. So that's one thing I mentioned time is a factor, or days to expiration is a factor on theta and the value of our options. The other factor is volatility. So if you click on the spinning wheel down here, it opens up some more parameters, and volatility adjustment is one of the options. So if volatility were to increase by 1%, as you can see, our profit line has moved down. So that's actually a negative for our trade if we're trading an iron condor. It's actually lowering our profit line. It's actually giving us a temporary loss on our position. But what if volatility goes the other way? What if volatility contracts and goes down? Which is the goal of when we put on an iron condor, is we want volatility to contract. That's what helps our position. So let's say that volatility contracted by 1%, price stayed exactly the same. Now all of a sudden, as you see, we're up over $1,400 on this trade with price staying in the exact same spot. Okay, that's the power of volatility contraction, and that's the power of this type of trade, as long as you're entering the trade in periods of high volatility and you're getting that contraction. I know this might be confusing, but please understand it's beyond the scope of this course. We have a lot more detail in our other courses about how to profit from specific strategies like the Iron Condor. Let's move this back down to where it is right now. And take a look at the third thing that affects your theta or your position, and that is, so we looked at time, we looked at volatility. The other thing is the movement of the stock. So the stock is not going to just stay in one place, each day as the market's open. The stock, or in this case the S&P 500, is going to move around. So look what happens to theta as we move around. So again, theta is important because it does show us in a snapshot of what our theta is. However, it is a moving target and it's something that's going to move around. So as it moves around, you can see our theta can go up and down, up and down. But it's an extremely important factor of watching your profit and understanding how you can earn income from this type of trading strategy. I hope this is helpful. I'll see you at the next lesson.